So I've been trading 8 years, and about 6 of those years have been profitable. And if you're anything like me, you're just an average person. You're just learning how to trade. You're not really after Lamborghinis or private jets or anything like that. You just want to live a comfortable life. You want to be able to do the things you want to do, and you don't want to have to worry about money every single day or going to a job that you hate. I started trading 8 years ago when I was 21 because I wanted freedom. That may be you. You may want financial freedom. You may want time freedom. You may want freedom in a number of different ways that is really hard to put into words. And if that's you, you and me are the same. In this video, I'm going to show you what's worked for me. Now, my trading strategy has changed like 69,420 times over the past 8 years. However, in a sense, it's always stayed the same. Like I've always bought when I think price is going up, and I've always sold when I think price is going down. Now, the reasoning by which I get to that decision of whether or not to buy and sell, the reasoning is just a narrative, right? It's just a story you tell yourself. For example, you might buy whenever you think, price is in an uptrend and now it's pulled back here and that's a 50% Fibonacci pullback, and I'm going to buy and my stop loss underneath the 786 Fibonacci and then a target of the extension 1.21 Fibonacci or 1.618. Like you may have all these reasonings and the story that you tell yourself as to why you take a trade. But at the end of the day, like you and me are both doing the same thing, right? It's our best guess. We're using some sort of analysis or some sort of methodology to get us to the end of the equation, which says that we think we're going to buy or sell. And in some cases, do nothing. Like probably in most cases, just do nothing, wait. And then every now and then you're like, okay, now I'll buy, now I'll sell. Now, I've live traded for the past 6 years. A big portion of this, I was just calling my trades for free in my free Telegram channel. You can join us at the link in the description, and also I'll put the link in the pinned comment. It's just a free Telegram channel. You can literally join in the next few seconds. I just share my daily analysis, insights, and things like that. I no longer call it the specifics of my live trades. I do it retroactively after the fact just to show the results. But I call all my live trades now, it's a paid subscription group. I've got hundreds of people inside my paid subscription group called Nick's Trades, where I share all my live trades. I do all the exact entries, the management, everything. I show all the P&L. I show the actual trading account terminal. It's not signals like buy here, this and that, here's the stop loss. I will show the trades that I am actually taking. I just say like, I've just done this, and I screenshot it and put my actual trading terminal in the group so people can see everything. All the win streaks and all the losing streaks are documented. This year, we're overall in a net profit since I started the group in March. There was like 6 weeks where I had $180,000 of wins, and then we have like the past 2.5 months where I'm down like $125,000. I show literally everything. And again, I've showed everything for the past 6 years that I've actually been teaching people. I've always live traded. That's the only way you'll know if someone's profitable. People can show you broker statements, people can show you at my FX books and this and that, but you don't even know if it's them actually trading it. And plus with meta quotes, there's also things where you can go back in and you can actually label the servers and you can actually input whatever data you want. You see a lot of people doing this if they have affiliate sponsorships with brokers. They'll just go in and edit the results and show that it's whatever you say it is. Bunch of videos on YouTube about how people fake this stuff. The only way you'll know if someone's profitable is if they can live trade. That is literally the only way you will know. If someone's not calling their trades out live, it's just really hard to make a determination as to whether or not they're actually profitable and whether or not that's actually them with the results that they allege they have. So always focus on whether or not someone's live trading. Again, you can see all my results in my free Telegram channel that I've run for the past 6 years. The first link in the description. And I'll put it in the pinned comment. So let's go ahead and get into it. How do I actually trade? I'm going to show you. So first, let's start with kind of a simple little breakdown here. I put these little zigzaggy lines to show you guys this super high production quality video. Now, when price goes up and then it comes down and then it goes up and then it goes down and then it goes up, my philosophy is, okay, it might go down. So this is like essentially saying like, if it goes really far in one direction, I just think it might have a pullback and a reversion. What time frames do I trade? The daily, 4 hour, 1 hour. I kind of look at everything interchangeably and I kind of make a decision based on the totality of the circumstances and of course my experience. It's the same thing vice versa for buys. Price goes down, makes a low, pulls back, makes a lower high, lower low, lower high, lower low. I'm the guy that's down here buying on the lower low, thinking that it might pull up and make a lower high, at least enough to get me out in profit. That's pretty much it. I just buy when I think it's going up and I sell when I think it's going down. The reasoning, it's just experience. That's all. It's me looking at the chart saying, okay, I think that's gone far enough down. I think here there's going to be a lot of people who are in sells that are taking profits, causing a push up in price. And there's also probably a lot of people that are actually buying down there because maybe it's a support zone or maybe it's gone so far they're like, price is cheap. I'm just going to start entering some buys. It just causes more liquidity and orders to come into the market to just usually have a price resurgence to the opposite direction. Some people call this anti-trend trading or counter-trend trading, or you're trying to pick the reversal or trying to pick tops and bottoms. Again, you and me, there's no difference between what we're doing. You just have a different narrative, and I have a different narrative. I'm like buying because I think it's gonna bounce upwards because it's all my experience and it's gone so far and it's that. You may be buying because it's an uptrend and it's pulled back. But ultimately, all of our reasons don't matter. If you're manual trading, what matters is your experience. That's all that matters. That your experience, your discretion, your intuition is what helps you parse whether or not a trade setup is viable. Because you will also find there are some times where technically a setup might be good, quote unquote, but you feel like that's a weird setup and you don't feel like you should actually take it and you feel like you should avoid it. That feeling you get, that is your intuition speaking. And again, this is the only way you're profitable as a manual trader. You have to have that feeling about whether or not it's a viable trading opportunity that you only get through years and years of experience. 90% of people fail at trading. If you don't believe me, go look at the comments on my videos. 90% of the people giving advice in the comment section of my videos are in fact not profitable. That's just the statistical reality. This is why you should only take someone seriously if they live trade. If they're not proving to you that they can actually make a profit long term, then they're just spouting all this nonsense and saying all this stuff. It's just best to avoid it because there are so many people doing so many things that do not matter at the cost of things that do matter. And people making all these statements and things that at best they're not useful, and at worst they can actually be a detriment to your profitability. You should only focus on getting experience on the chart. That is all that matters. If you have the experience, those are the keys to the kingdom, and there is no shortcuts. I'm trying to help you get that experience through showing you what has worked for me. So this is what I do. I buy when I think it's going to go up. I sell when I think it's going to go down. Let's actually demonstrate this in back testing. Now, the TradingView replay mode has a lot of limitations. It's maybe like 80% of what live trading actually is, because you can model a proof of concept, but doing it live on a demo account forward tested with real market data, that's way better to get experience. I'm just showing you this for the sake of making this YouTube video. Otherwise, I'd have to screen record like a 6-month YouTube video. You'd have to be sitting here for 6 months in one video. We just can't do that. So we're just going to use TradingView just for me to demonstrate to you what I do. Again, you can see all my results live in Telegram. If that's what you want to see, go see it there. It's free. You can join there in 10 seconds. Link in the description. First link in the pinned comment. Just you can go see it for yourself. There's about 15 currency pairs I have here on my list. So we'll do a random number generator between 1 and 15. That gives us the number 8. So let's go 1, 2, 3, 4, 5, 6, 7, 8. So USD JPY. Now in the TradingView replay mode, the JPY is going to mess with us because that's kind of a tough currency to do. Let's try to get one with AUD, NZD, or CAD, or USD. Let's 8 again. What are the odds of that? 14, 9, 10, 11, 12, 13, 14. It's another JPY pair. Let's just not do a JPY pair because it's going to be super hard to show the P&L. So 12, here's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 80 JPY. You know what I'm going to do? I'm just going to pick the 11. Okay, what's this? GBP AUD. Okay, let's just do GBP AUD. This will at least show that the currency is in AUD. That way, whenever we're showing the P&L, you'll kind of have a feel for what that is. For some reason, people are better at saying like, okay, 1,000 Australian dollars. They kind of have an idea what that is. If you tell someone it's like 500,000 Japanese yen, they're gonna be like, what is that, right? Unless you specifically are from Japan or you're familiar with that currency, it's harder to denote. So let's do GBP AUD. Okay, so let's go here to the 1 hour. We're gonna go back to a random bar. Where are we at here? November. Wow, this is 2008. This was pretty far back. So let's do it. So I use the 1 hour, the 4 hour, the daily. You see I've got the weekly on here, but I don't really check the weekly. Weekly and monthly takes way too long in my opinion, and I also don't look at like 1 minute and 5 minute just because there's so much volatility on those time frames. It just kind of makes it a pain in the ass to have trading ideas play out because of how quickly it can spike in one direction. I find a sweet spot is like the 1 hour, 4 hour, and daily. Almost none of my trades take longer than 1 month to play out. Almost none of them. In the backtesting replay mode, you're going to see some trading opportunities like play out like that take longer than that. And again, this is not reflective of reality. This is like maybe 80% of it, but there's just going to be a lot of things that you just cannot duplicate in backtesting that you actually do in live trading. So again, this is just going to be for a proof of concept. So what am I going to do? I'm just going to wait for price to go really far in one direction. And then I'm going to sell when I think it's going to go down and buy when I think it's going to go up. So we're going to simulate. Right now I'm trading with almost a 200K account. It's an account that I started at 300K, but now I'm down like 125K. So there's 315, now it's like 290. So I'm sorry, 190. So it's like Yeah, like 130K down right now over the past 2 months. We're going to say I have a 200K account and I'm going to risk $25,000 per trade on the first entry. Here's how I calculate my risk. When I enter, I usually start with just doing a one standard lot first. Then I'll drag the stop loss where I want the stop loss to go, and I'll drag the profit target where I want the profit target to go. So then after I have this risk here, right, this is, we're going to say, I trade in dollars, but this is AUD. We're just going to say AUD and USD are the same thing just for this video, just so that way we have something simple to go off of. I'm going to use AUD interchangeable with USD. So $25,000 is what I'm going to risk here. Risking $25,000 to make $25,000. Now there's no rules. I can close this whenever I want. I can let it hit stop. I can let it hit target. I can add to it in profit. I can add to it if it's in drawdown. There's no real rules here. It is just simply my best guess based on my intuition and discretion and experience. So let's let it start playing out. We're going to see what happens. So this one goes into profit, and it took from the 20th to the 21st. So, okay, about 2 days. This was an easy trade. This almost never happens like this. This happens like 1 out of every 5 trades. It'll be this easy. Usually there will be some management, some discretion, some trade management decisions, things like that. So yeah, let's just go to the next trade. Again, I'm just waiting for price to go really far in one direction with the feeling that, okay, it's gone really far, it might be likely to have a reversion, and then I'm just buying when I think it's going to go up and selling when I think it's going to go down. As long as you clearly define the risk, that's what matters. I don't put more into the account that I'm willing to blow, and I don't put all my trading capital into one account. I divide my trading capital among like Forex, crypto, and stocks. I keep about a third in each, and then I also keep some cash in the bank just for liquidity. And then whenever I'm trading with my Forex capital, I only deposit a relatively small percentage portion of my Forex trading capital into an account. That way, if I blow the account, it's not a big deal. Some people think this is bad. I think it's a way better way to control risk. Let's say you have $1 million to trade Forex with. I think it would be very foolish to actually deposit $1 million into a trading account. Because with trading, you have leverage, right? A lot of brokers give you 1 to 50 leverage minimum. And then some brokers give you like 1 to 500 leverage, depending on where you're at. I'm in the US, so I don't get that much leverage. Here in the US, we're with regulated brokers. They're only 1 to 50, and that's best case scenario. A lot of the currency pairs only get like 1 to 10, 1 to 20 leverage. So putting like a million into a trading account just wouldn't make sense. It's just like you're tying up so much capital. Better to just put, in my case, like a couple $100,000 into a trading account. That's a small percentage of my overall trading capital and a small percentage as well of my Forex trading capital that I'm comfortable losing. What matters is the dollar amount you're risking per trade. For me, $25,000 risk per trade is a small percentage of my overall trading capital, so I don't care. I just risk 25K per trade, sometimes 50K per trade. It just kind of depends on the setup. Sometimes I risk 10K per trade. It just depends on how confident I am. Whenever you're taking trades, I think it's best for you to define the dollar amount that you're comfortable risking. The percentages do not matter because, right, you could say like I'm starting a $1,000 account and I'm risking $100 per trade. Some people will say you're risking 10% of your account. That's insanity. Well, what if you have like $100,000 to trade with? Then you're putting $1,000 in an account. You're still only risking $100. You're risking like a fraction of a percent of your total trading capital. So the percentages, I think, doesn't matter. What matters, what needs to matter is don't risk a dollar amount that is more than you're comfortable losing. Like if you only make like $3,000 per month at your job, yeah, you probably shouldn't be risking $1,000 per trade, right? Because a small losing streak is going to wipe out your entire monthly income. If you're $3,000 per month income and then after expenses, you only have $1,000 left over, if you're comfortable risking $10 or $50 or $100 per trade, that's cool. But just make sure that you're comfortable with whatever the risk is. It needs to be proportionate. The starting balance in the account does not matter. I'll say it again. The starting balance does not matter. You just need to have enough to where you're not going to exceed your margin requirements by entering a lot size that's going to eat up too much of your margin and cause you to not be able to manage the trade. So risk what you're comfortable with. Okay, so now we've gone down further. Here's what I'm going to do. I'm going to enter a buy here. I'm going to put my stop down here and my target up here. But what I'm going to do is instead of risking $25,000 on this, I'm going to start this with a $10,000 risk. Then I can add to it if it goes against me. You'll see this is like negative risk reward, right? Risking like 10K to make 6K. negative risk reward. That's okay. A lot of my trades will start with a 1-to-1 risk reward ratio, but since I'm only risking 10K instead of 25K, I'm risking like less than 50% of the trade. So I could have added down there, but whatever. We'll just say we missed it. Call it a day. If it can go a little bit further against me, I'll add to this. We need to really press lower. Okay, here we go. So I will add here. Now the risk is 14K. Let's do 20K. Let's get it up here to, this is 26K. Okay, we'll do 26K. We're also going to have to adjust the profit target. Let's do like that looks good. Here we'll say risking 26K to make 30K now. We'll see what happens here. So it went into profit, then it pulled back. Here's what I'll generally do whenever something like this happens. My philosophy, right, is like if price goes really far in one direction, it's likely to have a reversion. If I go and I take a stop out instead of losing trades, if I still think, yeah, it's really far down here and there's nothing like crazy like macroeconomically or fundamentally going on, I'll generally just re-enter the same trade, but I'll do it with a new risk structure. So you'll see how I do it right here. This was a losing trade. It essentially wiped out, $25,000. So the risk was all proportionate. But now I can structure a brand new trade based off this new movement down. So I'm going to risk 9K to make 9K. And of course, now we're going to actually get it up to $25,000 of risk to make 25,000. So this way, if this next trade wins, I essentially just make back what I lost in the last trade. This is not martingale. Some people say it's martingale. Martingale is where you double your bet on each subsequent loss. I don't do that. Martingale is a terrible approach to managing the amount of money in your trading account, because the smallest losing streak will very quickly blow your account, and there's not really much upside because your upside is only like 1 unit of your original risk, whereas your downside can be insane. However, if you have a win rate that is like above 50%, using like a kind of like a dynamic like linear progression, like you risk 1R, 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 then maybe like a little bit more like 1.5R for the next one, that's not that bad of an idea, provided your win rate justifies that and provided you have an amount in the account you're willing to lose and blow. There are some times where I'll blow an account, but there's also times where I'm like, the account grows super quick because I get a random win streak, and because I've structured the risk appropriately, the win streak sends the account to grow a ton real quick. And then on my losing streaks, I'll lose money. I may even lose a significant amount of money, like the past 2.5 months, $130,000. But it's like over the course of the past 2.5 months, right? And about half the time, I made more money than when I was on my winning streak than I've lost in about double the time on a losing streak. Big wins, smaller losses. A lot of people don't understand this and they'll never get the hang of it, because trading is just a roller coaster ride of ups and downs. I recognize this is just what happens. It's just a part of trading, and 10% of you watching this video will recognize that as well. So to the 90% of you who don't get it and don't want to get it and will just say this is gambling and this is stupid, that's okay. You can keep losing money. It's okay. And I say that sincerely. Like, I'm just trying to help. I'm just sharing with you what works for me. Sometimes also my risk will just generally depend on how confident I am in the trade. There will be some trades I risk more and some trades where I risk less. Right now I'm risking about like 25K per trade with my broker, with my margin constraints, because I'm here in the US with a regulated broker. So I think that, like, if you're comfortable risking 10K on a trade, risk 10K. If you're comfortable risking 1K on a trade, risk 1K. You can risk different amounts on different trades depending on what you believe the quality of the trading setup is. All this comes with experience. You'll only be able to sort of issue a trade qualification like metric. Like, this is a 10 out of 10 trade. This is an 8 out of 10 trade. You'll only be able to do that if you have the experience to justify that. Like, so if I see a really good setup where I'm like, okay, I'm comfortable risking 50K on this trade or 100K on this trade. There's times I've risked $50,000, $75,000, $100,000 on a single trade. And again, all this is documented live in the Nick's Trades group, as well as post the results in the Telegram channel, as well as a lot of YouTube videos I've made here showing the actual setups. But you can risk whatever you're comfortable with in the trade. So this trade wins. So far we have like a, what is this, a 60% win rate, 66%. We've taken 3 trades. Yeah. That was a winner. This was a loser, and then the last one was a winner. So won 66% of trades. Won 2 out of the 3 trades. I'm going to go to the 4 hour just to kind of speed this up, let things go a little bit quicker. I just want to see, here we go. Oh, wait, this happened so quickly. Yeah, that was probably a good trade, but it's okay. We'll just say we missed it. I would like to see the high taken out, like a huge higher high occur. Okay, so this is starting to look good. Generally, what I find whenever I'm entering trades is like a big fast impulse in one direction. Those are generally the best entries. I don't always wait for that, but most of the time I just find they work out better. When there's like this little like bit of consolidation and there's like smaller candles, it just becomes more of a pain. What I like is stuff like this, which is why I said this was probably a good setup when I was looking at it on the 4 hour. Those fast moves in one direction really far. It's just my experience speaking. Like those just seem to work out a lot better and a lot easier and a lot quicker. So this right here, I'm essentially just waiting to see if we get a quick spike to the downside. Nobody knows what will happen. It's all just your best guess, but you know, that's why we have risk management. And of course, in reality, you'll be trading a bunch of other different assets as well. If you're trading Forex, like swing trading Forex, it's kind of silly to just trade one pair, especially if you're swing trading, because you might only get like a couple trades a year per pair. Imagine if you just get 6 trades, right? And you win 4 and then you lose 2 and you risk $1,000 on each. So you made $4,000 minus the $2,000 in losses. You've made $2,000 all year. One trade every other month for a total of 6 trades per year. It's just, you're probably going to be trading multiple other pairs. That's what I do. I trade all of these pairs that you see on the chart. And of course, with the exception of Bitcoin, I just hold Bitcoin. I don't trade Bitcoin. So I think this is a decent setup. I'm going to buy right here. Put the stop loss down here. Put the target here. I don't want to try to be a hero or target a higher high. I'm going to risk about $4,000 to make about $4,000 on this. So let me just add to the risk a little bit. I would like to add on this if it goes against me further. Because the further it goes in one direction, the more confident I am that it will have a reversion at some point, even if the reversion is just small enough to get me out of break even. So on this one, I'm going to start it with a 12K risk, and then if it goes further against me, then I'll add to it. Again, the risk structure is what's most important. So this one worked out. Unfortunately, it was only half of a normal winner, but still, it was 12K. So on to the next one. So now I'm going to wait to see if we can get another setup here. And how many, we're in 4 trades, right? 3 of them were winners, so it's currently a 75% win rate on an outcome by outcome basis. I don't count the number of trades because sometimes, right, you'll add to a trade. Here we go. This is sexy. So a big, fast sweeping move down. I'm going to buy here. And then again, I'm starting with a 1 standard lot just to kind of structure what the stops and everything are going to go. And I do this on my MetaTrader 5 terminal. Like I will like enter 1 lot like physically on my MetaTrader 5 terminal. It's on my phone right here. I'm recording the video with, but I'll enter that. Then I'll drag the stop. I'll see what the dollar amount risk is because in MetaTrader 5 you just tap the order lines and it shows you the dollar amount risk in terms of P&L. And then if I want to risk 25K on the trade and I did 1 standard lot and then I drag the stop loss there and it shows 5K, I know, okay, instead of 1 standard lot for 5K risk, I have to be in a total of 5 standard lots and that'll represent 25K risk. So then I just add 4 standard lots. Then it will be a total of 5 lots for a 25K risk. I'm actually doing that exact same thing here. That way you can see the mechanics. So for this trade, let's start out at $15,000 risk, and then I'll add to it if it goes a little bit lower down in here. So let's see what happens. Trying to see if I think this is actually going to go. Let's just see it candle by candle. Yeah, I'm going to go ahead and exit that right there. Now this could still pop up. Let's see what would have happened afterwards. Yeah, so it would have gone to the target, but again, a win is a win. Now, I understand people will be saying like, oh, the risk reward is messed up, or you're risking like 10K to only make 5K, or you're risking 15K to make 7K. I totally get it. I'm just showing you what works for me. Like, again, a lot of what works for people is very counterintuitive to common knowledge, right? Common knowledge and common sense is not actually common practice. Common practice oftentimes dictates in trading. You're doing things that seem very counterintuitive. Like, it seems very counterintuitive to risk 10K to only make 5K, right? But let's say you have someone with a 90% win rate, where like 9 times out of 10 they win the 5K win, and then the one time they lose out of 10 trades, they lose 10K. Well, you had 9 wins at 5K apiece, right? So that's $45,000 in profits, and then the one loss you take 10% of the time, that subtracts 10K from 45K. You still came out on top $35,000 with a negative risk to reward ratio. What matters is what works in practice. I'm just trying to help you open up your mind, broaden your perspective, because I see a lot of people teaching shit on YouTube that it just doesn't, like, in practice it doesn't make sense, right? Because I've tried most of the stuff that everyone's teaching. I've tried everything. I've tried all sorts of different stuff. I was literally at one point knee deep in like smart money, order block, liquidity, Wyckoff distribution, Wagyu beef, candlestick, trading strategy, silver bullet entry systems. Like, I was trying all this stuff, right, to just try to see if there was any merit to it. What it really just comes down to is being able to use your brain and your experience to parse what trading opportunities are worth taking. And then you just combine that with some form of risk management. You can risk however you want. You can use a stop loss. You can use hedging as the risk structure. You can use dollar cost averaging. You can add to losers. You can only like add to winners and move the stop up. Like, you can do so many different things. It doesn't matter. What matters is just experimenting with things and testing out what works for you. Again, I'm only showing you what works for me. This works for me in practice. If you don't agree with it or it doesn't work for you, that's fine. Just go find something else that works for you. 100% okay. Every single person will trade different, regardless of what the narrative or the story or the reasons are for each individual trade. It is what it is. So what I'm going to do is I'm going to see if it can either go up really far higher or really far to the downside, and then I will decide whether or not to buy or sell. Again, I'm just waiting for overextended markets here. And I know overextended is a real subjective term. It's like, what do you mean by overextended? How do you calculate that? It's just, I look at the chart and ask myself, does it look like it has gone too far to where it is, quote, overextended? It is a completely subjective concept that I've just come up with after trading so long that I'm seeing the same thing over and over again. And I'm like, okay, that's gone too far down in my opinion. So I'm going to buy here, and then I'm going to risk this much. And then if it goes against me, then I'll add here. Then here's what the total risk will be. It's like everything's kind of structured and pre-planned. That's why on my losing streaks, like, I don't wipe out all my profits. And I'm on break-even streaks and losing streaks for like most of the time. I mean, like, it seems as though 20% of the actual trades represent like most of the profit. It's like the 80-20 rule, right? Like, where 20% of the trades will represent 80% of the total profit I make. And the other 80% of the trades I take is like break evens and small losses and big losses and all sorts of different stuff. But it's like 80% of the time, everything's just kind of going sideways, or I'm making a little bit of profit, or I'm making like a break even or small losses or big losses at times. But then like 20% of the time when I get my random win streaks, right? The win streaks are short lived, but I just make so much on the win streaks when I'm on a win streak that it pays for all the losses and more. It's just a matter of getting through the losing streaks and slow periods so that by the time I get back to a win streak, I haven't like wiped out everything. If price can go up a little bit higher, I'll probably sell up here. We need a clear higher high though. And that probably doesn't look like it's going to happen. So now we'll just revert. We'll say if it goes down here, then I'll buy somewhere down there. Okay, so let's have a look at this. I don't really use support resistance, but we're getting close to a low. For what it's worth, some people will say, yeah, you're buy at support, stop loss below, target above. I don't really do it that way. It doesn't even factor into the decision, right? It's like I look and I'm like, does price look like it's ready to have a reversion back the other way? That's it. So does this look like it? Yeah, I mean, obviously, you don't know which trades will win and lose, but this is good. We've been coming down for quite some time now. We've had a quick move to the downside. What I'm going to do is I'm going to buy here. I'm going to use a dollar cost averaging risk structure here just to be able to not get stopped out, most likely, if this trade's going to work out. I'm going to start with my profit target there, and I'm going to risk, let's start with like 15K risk on this. I'll add if it comes down here. And in this case, I would be willing to risk more than 25,000 on this trade. Let's say for a maximum of 50K, just because I think that this is a situation that's more likely to work out, even if it goes against me a little bit further before it goes up. This is why I'm starting the position a little bit smaller. So that one ends up working out for 10K profit. But keep in mind, if I was wrong, the likelihood of this ending in either a break even or profit was still very high. So now you've seen me take 5 trades. 4 of them have been winners. The win rate is currently 80%. So, yeah. I know a lot of you will be thinking, well, Nick, you could have made 25K had you risked out and used a 1-to-1. And it's like, yeah, you could have, should have, would have. What matters is like how the losses are managed. Like when you get a win, cool, on to the next one. What matters is like structuring the losses so that like that way, like, you know, like when you lose, like you've already kind of decided like what the risk was, what the likelihood of the loss was, what the percentage chance you're going to win is. My win rate, when I first started, like it was like 92%. Now it's down to like, I don't know, it's above 50%, but like, a lot of things have happened the past 2 months. Like I switched from a broker with high leverage to low leverage US regulated broker because my previous broker mysteriously pulled my MetaTrader 5 license and MetaTrader 4 license after I made 180K in 6 weeks. Seems really suspicious that they would do that to me, but they essentially like rendered me unable to trade with them and they didn't give me another platform to trade with. So I had no option but to just withdraw all my funds and move to another broker. There's no other broker I could trade with. I had to use the regulated US broker unless I jumped through a bunch of hoops. So now like the margin and leverage has screwed me up. A lot of the trade setups I've called over the past, the past like 3 months, they've worked out, like the outcomes, but I haven't been able to profit from them because like I either got stopped out beforehand because I didn't have any margin, or I couldn't take the trade because I had chewed up too much margin on different trades. It's been really frustrating, but I think I've got the system down now. I just had to risk more. I had to risk less. I was risking like 50 to 75K on like a 300K account and not having the margin to enter anything except one position on one trade. Couldn't even add to the trades. It's crazy. Screwed up a lot of stuff, but I've got the system fixed now. So this is working for me in practice now. Past 3 weeks have been profitable. I'm going to take a buy here. Let's see the profit target. I'm going to start right there. This is one I would add to if it goes against me. I'm hoping we get one that goes against me. That way I can kind of show you guys how that's managed. Let's risk, this case it'll be like 16 grand. Let's risk like this was 15 grand to make potentially 10 grand, but with the idea that I'll add here. And on this one, I would risk more than 25K. Well, let's say a maximum of 50K risk is what I'll allocate to this trade. So that one doesn't work. Well, I mean, it worked. Okay, yeah, another profitable trade. Hopefully we'll get one that goes further. That way you can see how losing trades are managed. So currently on the 200K account, the account's up 66%. Let's try to get it to like 100K profit. Let's see what happens. 100K profit will be like, a nice amount. And currently at 6 trades taken, and then 5 of them have been winners. Wonder what win rate that is. 5 divided by 6. It's like 84%, 85, 86%, something like that. So let's see if we can get a flash downwards really quickly. There we go. This is looking good. So, all right, hopefully this one will go into drawdown. I know it sounds kind of funny. I just wanted to show it to you guys. That way you can see like how the losses are managed and what a big loss actually looks like. I think this could play out. This would be good. Let's risk. I'm going to drag the stop just a little bit further. We'll say 15K. I'm going to keep the target right around this area. Some people will say it's like a support resistance. I don't know. I just think that's a reasonable place for a target. And then hopefully this goes into drawdown. Okay, fortunately, we've got a trade finally going to drawdown. Now, I'm going to show you how I'd manage this. So it's gone into drawdown right here. What I'm going to do instead of adding, I'm going to extend this to 25K risk. And I'm not going to add just yet. I'm going to now say, okay, now the risk is 25K. If we pop back up here, what I'll probably do is close like around break even. Might be a little bit of a win, might be a little bit of a loss, but around break even. I only count it as a losing trade if it's actually a losing trade. If it's like minus $300, but I've risked 25 grand, I just count that as a break even. I don't count that as a losing trade because it's not a losing trade. It's like, if you're technically speaking, like, yes, you lost $300, but I call a losing trade like one where it actually results in significant loss. If it's just scratched around break even, I don't call it a profitable trade, but for the sake of calculating the win rate, I won't calculate it as a losing trade. So that's just how I do it. Some people will say, oh, that doesn't make any sense, blah, blah, blah. I'm like, okay, whatever, it's fine. So 25K risk. Now we're down here. So here's what we could do, or here's what I will do. This is currently in a 10K drawdown. I'm going to add to it here. This risk, I'm going to keep it at 35K. So I've added about 10K to the risk. Then I'm going to do the break even. I'm just going to set it right here for now, but I'll probably be closing early if it does that. So in this case, it just kept going up further quick. If it would have got around the entry and floated sideways, it would have closed it at break even. Instead, unfortunately, it was a winner. So let's go to the next trade. Made 75 grand so far. That was how you saw a losing trade was managed. You'll notice the risk was not that much more than the max allocated risk, right? 25K average risk that we've been using for this, and that was 35K was the risk. And with a maximum of like 50K is what I would have done. Maximum, it would only had to happen to be 30K, 35K. That's how I manage it. Again, this may seem so counterintuitive, right? But I'm just saying, like, I just do what works long term. Like, it given a long enough time horizon, what works oftentimes doesn't really make a lot of sense to most people because of the common knowledge that's taught, in trading communities and forums and YouTube videos. It is the case that trading is not as simple as just, buy when it hits the moving average with the stop loss one standard deviation below and a 1 to 2 risk to reward ratio, and it has a 56% win rate, and you'll always be profitable. It's just not you can keep it as simple as you can, but no simpler. Like, I keep things simple and I control risk, but it's not always the case that it's just dirt simple where you buy at a moving average and the risk reward's always the same and it's just black and white. If that worked, you could just program an algorithm to do that. Look around. How many automated trading approaches do you see that are programmed in black and white data with good risk to rewards that use stop losses with something that's objectively defined? I have never seen that in 8 years. I'm saying it's just trying to sell you on the idea that you just need to use your brain and experience to trade instead of relying on indicators and technical analysis and all this crap. Getting closer to our target of 100K. I forgot how many trades we've taken now. I think it's been like 7. 6 of them have been a profitable outcome. Price made a new low. I'm going to enter there. I'm going to do, I wonder if because if price goes down here, I would just want to add again. I'm going to put that there, the stop loss there. I'm going to risk, let's start this with like 15K risk right here. Now, I just had to take off some of the position to keep it 15K risk. That's why it shows the sell here. We just need to remember this was like one trade and that was not anything. So what are we on the 7th trade now? 1/6 of them. Probably add once it gets like halfway. Yeah, okay, this is good. If I would have had the stop loss there, that would have sucked. I've taken a loss. So now the risk is 20K. I think I'll go up to a max. We'll say 30K risk for this. That's what I'll do. If I move the stop loss for 30K risk, or if I add to it, I'll just do a max 30K risk. So that was a loss for 20K. Since we had a quick spike down, I'm just going to re-enter this trade. I think this is very likely to work out. I'm going to risk, let's say 5K to go for, about 5K. So that'll start that off. Let me add to it to get it to the risk. Let's do a 15K risk for now, and then we'll add to it if it goes against us. Sweet. Okay, sweet. So now you guys actually get to see this work. So let's put it up to about $25,000 of risk. I'm going to adjust the TP to right there. I'm going to probably just take it out at break even if we get into a bit of profit. This just looks like it's really struggling. That should have been the break even right there. I just didn't pause it in time to close it. Ooh, that's painful. That should have been a break even trade. But anyway, it's a loss. So, we lost 20K in it. Now let me show you what I do next. We've gone down here. We've made another low. We've had 2 losing trades in a row. So out of 8 trades, we've won, 6 of them? So, I don't know, 6 or 8? I don't know. You guys calculate the stats, whatever. You put them below in the comments. But we still have a high win rate. What I'm going to do is I'm going to buy here. And I'm going to put a stop here. I'm going to put a target here. This is good. So here's what I'm going to do. I think this is likely to win. I'm going to start this with like a $25,000 risk. Well, here, let's just do 30K risk. 30K risk to make 30K. And then what I'm going to also do is I might even add to this if it starts to win, and I'll just move this stop up closer. Let's see what happens. So this one goes on even further. So now the account is back to break even. See, it was up 75,000. Now it's back to break even. I'm going to show you how I'd manage this. I'm going to go into another position here. Again, I understand many people are going to say this is revenge trading. You're making less on the winners than you do on the losers. I understand all that. I completely understand. However, again, I'm just showing you what works for me. I'm showing you what I do in practice. I'm going to do 30K risk for this to make potential of 30K. And I'm going to also try to manage it. This is in 2009. It's crazy. I was a freshman in high school when this is happening. So that wins 30K. So now we're back in some profit here. Let's see what can happen. Up 75K, and now we're back down to like 30K profit. Just for the sake of time, I'm going to speed this up on the 4-hour. We're going to see. Okay, here we go. Sweet. So we've gone really far in one direction to the upside. Here's what I'm going to do. I'm going to sell. I'm going to put the stop loss up there, target right here. A little less than a 1-to-1, and we're going to do 15K risk to go for like maybe 10K of profit. Let's see if this can work out. I'm going to add to it if it goes maybe like halfway in between. So that one didn't go into loss, so it just made 10K, so 40K risk, or sorry, 40K profit so far. Let's keep going. I'm just going to stop wherever I feel would be a good place to stop, and then I'll let you guys calculate the kind of the stats below, like the win rate, the average trade duration. If one of you guys could just take the time to do that and put it in the comments below this video to kind of model it. Again, this is like 80% of what I'd actually do in live trading, but it's not always going to be 100% right, just because of the limitations of backtesting and replay mode. But yeah, let's just try to get it to 50K profit, right? That'll be good. That'll be a 25% gain on the account. But 50K is 50K. So regardless of the percentage gain, if 50K is a good amount of money to you, 50K is a great amount of money to me. Sometimes I'll make it in one trade. Sometimes it'll be like 10 trades over the course of a month. What I'm waiting for is like a quick spike, like in one move, one way or the other. I like when price breaks previous highs and lows. I just like it to go like, quote, really far before I start saying, okay, I think that is, quote, overextended. I think it's going to have a pullback at some point soon. I'm going to get in. I'm going to structure the risk. That way I can profit from it, even if I'm wrong first on the first entry and it goes against me. And then I can just add another entry. I always make sure the risk is whatever I'm comfortable with. Sometimes it's 10K, sometimes it's 30K, sometimes it's 50K. right now, again, like I said, it floats around 20 to 25K right now. So it was 50K back when I was able to trade with higher leverage, but I'm not in that position now. I'm trading with US regulated brokers. I'd have to put like $1 million in the account to be able to trade with that. I just don't want to tie up that much cash in one brokerage account. So this has gone really far this way. We could take out that low and that would be fine. Let me see what the next sort of, yeah, let's see. So we're getting here pretty close to that low. I'm going to start here. 2,400. It's a pretty tight stop loss. Getting a call from my girlfriend. Let's do 15K risk. 15K risk to go for a 15K profit. So it's gone halfway down here. Instead of me adding to this, what I'm going to do is I'm just going to drag the stop further down to 20. A lot of people say this is so bad. You should never drag your stop losses further. In the context of what I'm doing, right? When I'm entering a trade, knowing like, yeah, it could go against me. What am I going to do? I either add to the losing trade, which increases the risk, or I just increase the stop loss distance. So then it increases the dollar amount risk, yes, but if it makes it more likely that it's not going to result in a loss, because then if it pulls back to the entry, I could just close around break even, which I do like a good chunk of the time. So let's see what happens here. I've just dragged the stop to 20K. I'm going to go ahead and get out of here around break even. I think this has a good chance of going up, but I just don't want to risk it. I would wait for it to pull back, knock out the low. So this is nice. Now we have a nice little stampede upwards here. I'm going to wait for a clear spike. That trade would have worked out, but you know, it is what it is. You're never going to get everything perfect. What matters is controlling the risk, as I've demonstrated in my live trading over the years, as well as here in this video. Matters is controlling risk in a way that you're comfortable with. Don't listen to what everyone else says, right? Because there's nothing that's absolute. There's nothing that's black and white. You shouldn't worship the altar of any trading strategy, or only 1 to 2 risk reward, or only 1% of your account risk per trade, or you should never have a negative risk reward, or you should never add to a losing trade. You should never, like just, it's not helpful to use those mental approaches, because trading is just inherently not objective or black and white. It is very, very subjective. I'm going to let price dump past that low. I could buy here, but for some reason I just think it'll be a better idea to just wait for it to go past the low. So we've gone past the low. Here's where I'm going to start positions. I'm going to try to make this very unlikely to not work out. $4,500 stop down there. Target. I don't think that target will be hit all the way up there. I'm going to start with 13,000. Let's do $15,000 risk way down here. Let's put the profit target right here. This way I can add to it. If it goes really far against me, I can add to it. Tried to go up but failed. Now we've gone down, made a new low. I'm not going to add to this right here. If anything, I'm going to wait to see if this pauses, and it doesn't pause. So now what we're doing is it's coming back down here. That was a loss. Now we're at 27,000 profit, but we've gone really, really far to the downside. Here's what I'm going to do. I'm going to buy. We have a lot of potential upside we could assume up here. 4,400. On this one, I'm going to risk 25,000. I think this is a more high quality trade, but who knows, right? Maybe you could stop out. We're fixing to find out right now. I think this $25,000 is reflective of my confidence in this working out. And again, I could be wrong, and that's okay. But I want it to be, like a situation where this has gone really far down, and then I had to pull up, and then it's gone really, really far down. We've got these huge lows, and it's a fast spike. There's just multiple things that tell me that like a good chunk of the time setups like this work out. Now, not every time, but a good chunk of the time to where it's worth taking the bet and it's worth risking a lot on it. So let's see. This looks like it's failing right here. It's kind of stumbled. It tried to go up, but then it failed. um, almost took out that stop loss. Let's see if we can get a little bit of a resurgence. I'm going to just put the TP right there for now, just to kind of get out at break even. In most cases, I probably would have already been out of this at break even back here. And how long has this trade taken? March 1st to April 10th. So it's been about a month. And this is about, like the average length of a lot of my trades, like swing trading perspective. I can guarantee you I would have already been out of this around break even. But, for the sake of replay, we're just going to let it play out. Can I just close up there when I... April, 21st of April. So we're coming up on 2 months of holding this trade. It goes and it hits the 5K target. So that's not realistic. However, again, we're just letting it play out for the sake of replay mode. Just trying to get to 50K profit. Then we'll be done with this. Fortunately, we've had plenty of trades that did not work out, according to plan immediately, right? They just stopped out. That's good. That way you guys can see how the losses are managed. And you see that it's still profitable, right? You'll get win streaks, you'll get losing streaks, you'll get periods of trading where it's a pain in the ass, and you'll get periods of trading where everything seems to just gravitate directly to the profit target. And you're wondering am I doing something differently, or what's going on? There's just simply periods of time where markets respect your trading strategy better, and there are periods of time where it doesn't. So this is nice. I love stuff like this. Some people would say this is a crazy fundamental event. It's wild. It's 1,400 pips over the course of 9 days. I like stuff like this. Now, due to the aggressive move up volatility, I'm still going to sell this, but I'm just going to do smaller sizing. You see that just one lot is $6,000 risk already. I don't know if that's... I'm going to set it up like this for starting. I'm only risk 12K on this. This means I give myself a lot more room to add to it. So that's so we make back. So now we're back to the 40K profit. We're just gonna try to get to 50K, and then I'm gonna call it a day, and we can wrap it up. This way, you guys can see everything play out, and you've also seen all the wins and losses. So let's just wait for another setup, and then we'll take it. I'm gonna go to the 4 hour in the interest of time. Here we go. Love this. So we've broken the highs. We've gone up. We've made a higher high. This move was not swift enough. I don't like the smaller candles. I think this is more likely to go up. Not enough to where I would actually buy it, but just to the point where I'd be I don't want to sell it. A lot of people ask me, well, if you think it's going to go up higher, why not just buy? Well, then it becomes a question of what's the risk structure? Where do I put the stop loss? Am I going to DCA if it goes down? I would have to put the stop just under the recent lows. Otherwise, it could go way further to the downside. In this case, this thing is more likely to go down as compared to continue up, in my opinion, but not so likely to whereas I will go and actually buy. It's a matter of saying, if XYZ happens, then I will ABC, instead of saying, since I'm waiting for it to go up to sell, why don't I just buy? That doesn't work in practice. See, look, if I'd bought here, I would have been stopped out. And then if I would have been DCAing in, I'd be DCAing in all the way down here. It just doesn't work. That's why I don't do that. It doesn't work most of the time. It doesn't work enough of the time to where it would be a viable, profitable approach for me to use. In the interest of time, we'll go to 4 hour. I'm hoping to just kind of get a last trade here so we can wrap this up. Again, I wanted this to be a comprehensive approach. That way you guys can see exactly what I'm doing. So that way when you're following my trades in Telegram, you're seeing what I'm doing, you're seeing this and that. You have all the context, or at least as much of it as I can provide that I can put into words. This is good. Okay, yeah, now we got another lower low. I'm just going to wait for a little bit lower. There we go. Okay. I think this would be a reasonable spot to get long. Let me just see where the previous low down here. I'm going to buy here, put a target up here. Let's see what the stop loss would look like. At a 1-to-1, it's underneath the lows, but that's like the most likely area it could revert at. I'm going to put the stop right there. Let's add, this will be like 12K risk. Put the profit target like up here. 10K. Let's see if this works. I'll add to this if it goes against me. Didn't quite go all the way yet to where I'd like to add at. And plus, I prefer it to be like a quicker spike. Yeah, I don't know. I don't feel like it's a good time yet. This looks like it's kind of like just trickling down. Not to the point where I want to close, but certainly not to where I'd want to add. So that was pretty good right there. I'm going to add to this. I'm going to also adjust my stop a little bit lower. So now this is a $25,000 risk to go for potential $25,000 gain. I probably won't hold to there. As a matter of fact, I'll probably only hold this far because now since it's gone against us, it has to move further to be able to still work out from a viability perspective. In the interest of time, I will, oh, it's moving. I was going to go to the 4 hour. Let's go to the 4 hour here. Perfect. I will be starting a new position if it does hit the stop. That probably should have been a break-even closure there, but I'll just let it play out and we'll just see what happens. Okay, so this stops out. So now I'm going to let it go down a little bit further. I'm going to re-enter with a $25,000 risk. Yeah, this is good enough. On the 1 hour, it looks like it's kind of trickling down, but on the 4 hour, it looks good because now we should see like a big reversion back to the upside. Not every time, but just most of the time. I'm going to risk $25,000 on this one. So we'll just 27K. So this one starts to go up. I'm just going to hold it. No modifications. Not going to add. So now this gets us back to around where we're at, 45K. We just got another 5K to go to get to profit target. The reason I'm still going on with this video, not just calling it here, is just because I want you guys to see like, okay, there's going to be wins, losses. At the beginning of the video, you saw the win rate was like 85%. It's like 80 to 85, something crazy, right? Now the win rate is whatever it happens to be. Again, at the end of this video, those of you who want to do it, put all the stats and the metrics here, like in the bottom, like the trade duration, average risk per trade, average risk reward, if you can even calculate that, which you can't because if you're adding to losing trades, it fucks up the risk reward. Put all the stats below, but you're just seeing the reality. Like sometimes things go amazing, sometimes things don't go amazing. But overall, the whole goal is just to make a little bit more than you lose. That is all I am doing here. I just want to get one more win for like 5K so I can wrap this up. It's not really having some big sweeps one way or the other. And generally you'll see like if I take a stop out right on something like that, but then it goes really far. Generally the second trade will work and make back everything that was lost on the previous trade. Sometimes you'll be wrong 2 times in a row. That's why you should only risk what you're comfortable risking. If something looks weird and you're like, say you normally risk like $100, but something doesn't look all the way right, but you still think it's worth taking, you can still take the trade, but maybe just risk a smaller amount. Instead of $100, maybe risk $50. It's all up to you. It's not black and white. You don't have to do the exact same risk for every trade, especially if your intuition's screaming at you like, dude, this trade is still worth taking, but maybe not at the same level of risk as your other trades. You will also find other trades where you're like, this is really nice and really likely to play out. I'm gonna buy here, and I'm gonna risk, maybe a little bit more. Instead of 100, maybe like $150. You will see people say like, oh, it's a horrible idea, this and that. Again, I don't think it's that bad of an idea. If you have the experience to justify that, like you think certain trades are more likely to play out than others, in my opinion, I don't think it's bad to risk more on trades that you are more confident in. It's like saying, are you more confident in buying the S&P 500 and holding it for the next 10 years? Or are you more confident buying some sort of crypto altcoin token that no one's ever heard of and holding it for the next 10 years? Which one do you want to put more money on? The crypto altcoin, the shitcoin, hoping and praying it works out? Or the S&P 500, which for the past over 100 years has continued to just make all-time highs all the time and just continue to go up and up and up and up and up. Your confidence and conviction in the trading opportunity is what should represent what the risk that you're actually assuming on that trade. If you're not that sure, maybe you don't even take the trade. But if you're sure enough that you think it's worth taking, but you don't want to risk like an amount that's uncomfortable, just risk what you're comfortable with on that specific trade. It does not have to fit into a box of black and white. $100 risk for every trade. Otherwise, I either take it or I don't. It just, in practice, you're just probably going to leave a lot of money on the table. And also, you're probably going to end up taking trades with a risk that you shouldn't be doing. And you're not going to be listening to your intuition. Okay, sweet. I'm going to buy here. Let's see, 10K risk for about a 10K gain. Let's do that. I might move the invalidation a little bit if it goes against me. Okay, well, that worked. So that made 10K, so the account has now got to $55,000 profit. The high watermark of this was $75,000 profit, and I was trying to get it to 100K, but then you saw the losing streak happen. But as you'll see, the losing streak didn't wipe out anything crazy, right? If anything, it just wiped out the profits, and then the very next trade brought it all back with more, and then it ended up in profit. The whole point of this video was to show you my trading approach in the best way that I can represent it through the TradingView replay mode. Again, if you want to follow my live trades, just join my free Telegram channel. You can see all the recaps and stuff of that. And if you want to follow my live trades in real time, see all the trades that I'm actually taking, full transparency, full P&L show. I show all the live account terminals, everything. You could follow all my win streaks and all my losing streaks. Then it is the Nix Trades product on my website. It's the only product to sell right now. Just a subscription group where people can follow my trades in real time if they want to see which trades I'm taking. I don't sell any courses anymore. I don't have any other products. I don't have any broker partnerships that I make money off of. The only thing I don't even monetize my YouTube channel. Like none of my videos are monetized, so you can't. There's not even any ads. I don't even make you guys watch ads. The only way I make money from trading is just from people following my live trades. That's it. So if you want to follow my live trades, go to my website. You can follow my live trades. It's not always butterflies and roses, but I have great win streaks, and then I have losing streaks, and I have win streaks and losing streaks. But overall, everything's profitable. So if you want to follow it, follow it. If you like this video, good. I'm glad you found it useful, and I'll see you in the next one. Cheers.